Let's talk tech and M&A and the big move in Bandwith shares year to date, which have more than tripled. David Morken is the co-founder and CEO and chairman of the company, joining us here. So, David, first, I want you to introduce yourself to our viewers here. We've had so much focus over the last 6 months on big tech companies that have made our lives easier. I think your guys' story is one that's been a little overlooked. Tell me what you've been doing here.
Well, thanks for having me, Oliver. So my name's David Morken, as you said. I'm the co-founder and CEO of Bandwith. We're based in Raleigh, North Carolina, and we are a cloud communications company focused on the enterprise. What we enable enterprises like Zoom and Microsoft and others to do is to embed voice and text experiences within their apps or within their user experiences. We've done that nationwide for quite a while, and with the announcement that we've acquired Voxbone, we're excited that we'll be doing that globally in over 60 countries around the world, representing 93% of global GDP.
Now, the expansion here to move around the world, bring that business outside the U.S. Street seems to like it. Stock is up on the $500 million acquisition. You don't always get a bid to the stock after a big deal like that. Is this a cheaper way for you to get that exposure instead of having to hire people and do all the expansion? Or is there a product here as well that they're bringing too?
The team is just tremendous and was the primary driver for us coming together. The opportunity is also enormous. We operate in the CPaaS space, the communications platform as a service space, and over half of the total addressable market in our space is outside the United States. This announcement of Voxbone joining Bandwith accelerates our roadmap by at least several years, bringing us into these worldwide markets on behalf of our customers. And so, while the markets might really like the announcement, what's more gratifying to us is that our customers, our large enterprise customers, are thrilled. We will be serving them around the world like we have here in the United States.
Right now, the clients and the companies that you work with, can you give us some more details? You mentioned Zoom. Is this a big client, or is this just an example of where the actual product style and value proposition makes sense?
They are a great customer. We also serve many other large tech customers. In fact, Oliver, among the Gartner Magic Quadrant leaders in conferencing, where Zoom is a leader, in the unified communication space, and in the call center space, after this combination with Voxbone, we will serve 11 out of 12 of the Gartner Magic Quadrant leaders in those sectors. And so we've really got some tremendous customers that we're growing with very rapidly.
So for many folks watching this, they might say, wait, hold on a second. Voice, you're doing voice and text applications and scalability for a company like Zoom, where the product is about voice and text and communication. So is the Bandwith technology in the background, is it code then that you're selling to these companies to make their software run more simply? Walk me through where you are within the product that people recognize and know.
Great question. We are a software platform and a worldwide IP voice network. So for example, Oliver, if you're doing a Zoom call and you dial in because you want to be able to walk from behind your screen and use your mobile phone for the audio, that's Bandwith. If you're a Microsoft Teams user and you've got an audio conference bridge that you're dialing into, that's Bandwith. We, with one API, allow enterprise customers to code once to our platform and support users around the world.
So then, is this a way, is your technology allowing these products to function by being more bandwidth efficient, to not take up as much power as they would need to, so that they can operate in different functionalities? Does it help the company's bottom line so they don't have to spend so much on bandwidth?
Competitors, the alternative for these tech companies to use are incumbent providers like Verizon or AT&T,
exactly,
who don't have a software platform. So we win and we serve our enterprise customers because our software platform unlocks the goodness of being able to make a great quality call within an application or across applications. That's vital when you're trying to reach almost everybody on the planet. in a communications experience, whether they're customers, whether they're employees. If you have an app or a browser-based experience and you want to use a phone number, if you're an advertiser, to reach an end user, for example, our platform lets your product team, your developers, code to our API and unlock that phone call for your users.
Okay, so that's kind of what it sounded like, that you're going after some of the legacy carriers' lunch here a little bit. When we consider the future of 5G, what does that mean to you? Is that a good thing, or is that going to be steeper competition from the legacy carriers who operate those airwaves?
I think it's unrelated. It's a good point because 5G is ascendant, but with what we do, we're in the app, we're in the browser, and we're really bridging that gap between the old phone world of the incumbents and the new exciting world of engaging with customers all the time, in our case, using voice. And so 5G really just isn't that relevant to us.
Okay, all right. So the internet and the service, regardless of what form it comes in, you guys are operating in the next step after that. In terms of the fundamentals for your company, you're up huge on the year. The shares have rallied 200%. They're at a high right now of $196. I know that most recently you told the street that you were looking for better than expected numbers for the guidance for the year. What kind of revenue do you expect to see post-quarantine compared to what you got during this period where so many people were forced to access and use all these products?
You know, the quarantines really lit the fuse on the rocket that was the digital transformation for enterprises moving to the cloud. So what we think is we absolutely hope that life returns to normal, but even though we expect that to happen, the enterprise move to the cloud is accelerating. And so we expect to grow with large enterprise customers who prefer engaging with their users and their own customers using our platform instead of an incumbent that just hasn't kept up.
So 25% year over year, I believe, is the latest estimate you guys gave for 2020 revenue. Is that correct?
We've provided our guidance to the street for this year, and we've been very fortunate, Oliver, since going public to keep our promises on our performance. But we're also a company that really values both top-line growth, but also bottom-line profitability and the discipline that comes from being an operating team that's grown out of our own cash flow all the way up to our IPO. So while we do believe in great, healthy growth, we reconcile, I think, really well that need to build a long-term, enduring company that generates profit.
David, one other point, and I know you can't get too specific. You got an earnings coming up later on in the month. For those that want the details on the numbers, check out the latest announcement. The revenue growth of double digits expected here from what your team has said. But going forward, post-deal that you guys just did, where should that priority be, and where should investors expect it to be? It sounds like maybe it's not necessarily on the top line right now, where that's kind of been the baseline success over the last 8 months, top line growth. Going forward, is bottom line growth going to become important? The push to profitability, is that paramount to you, or what's the priority in terms of where all that cash flow is going?
Well, we've been spending more money on R&D and on sales than we ever have, and we're excited about the growth ahead of us. We've just always said and maintained that we want to be a long-term, enduring company that works for customers, not just for growth's sake. So there's no change in the message there. We've been very disciplined about applying capital to growth areas. This announcement today is extraordinary because what we announced was that it was going to be good for growth, for revenue, but also good for non-GAAP net income, good for and accretive to non-GAAP gross margins. So it really fits well and harmonizes with our approach to building a long-lasting company. Okay,
David, great to have you here. Appreciate the walkthrough here on the latest announcement. Congratulations. Looking forward to continuing this conversation.
Thank you, Oliver.
Thank you. David Morken is co-founder and CEO and chairman of Bandwith.